Did you know that for a surprisingly low barrier to entry of literally just $51, you can establish an ironclad legal shield around your personal assets while building your dream business in paradise? Welcome to The Explainer. I am so thrilled you're tuning in today because we're unpacking a comprehensive step-by-step roadmap on exactly how to start a limited liability company, or LLC, in the beautiful state of Hawaii. We're going to be turning all those complex legal statutes into a clear, easy journey to get your business up and running.
Okay, let's dive into this. Here's our agenda today. 1. Welcome to Hawaii LLCs. 2. Naming and registered agents. 3. Essential documents and filings. 4. EIN, taxes and compliance. 5. Licenses and trade names. And 6. Our final review and disclaimer.
So, Phase 1. Welcome to Hawaii LLCs, the Aloha State Advantage.
Before we get into any of the paperwork, I want you to ask yourself, why choose Hawaii for your LLC? Obviously, the scenery is completely unparalleled. But beyond the beaches and the gorgeous weather, what are the actual, tangible business benefits of operating out in the Hawaiian landscape?
Well, our sources outline some really specific perks that make up the Hawaii advantage. First and foremost is limited liability protection. That means your personal assets, like your house or your personal savings account, are legally separated from your business debts. Second, the local culture genuinely thrives on the Aloha spirit, which creates a super collaborative and supportive community environment for small businesses. Third, Hawaii boasts absolutely no state sales tax. Though, quick spoiler alert, we will be talking about something called the general excise tax a little bit later. And finally, there's that incredibly low $51 barrier to legal entry we mentioned at the start.
Moving right along to Phase 2, naming and registered agents, setting the foundation.
This is where we transition into the actual critical legal steps. The Hawaii Business Registration Division, or BREG for short, is incredibly strict about what you can and cannot name your company. Your name must include Limited Liability Company, or an abbreviation like LLC or LLC. But most importantly, it has to be legally distinguishable from any existing business. Also, keep in mind that certain words like bank, insurance, or university are heavily restricted unless you get special state approval. So always search the online BREG database first to make sure your brilliant name idea isn't already taken.
So, the crucial point is this. Minor syntax changes will get your application instantly rejected. A lot of beginners get tripped up here. For instance, if there's already a registered business called Omni Inc., trying to register Omni of Hawaii LLC is going to be denied by the state for being substantially identical. The exact same rule applies to just slapping an S onto the end of a word. You have to be truly unique.
Now, once you have that perfect name, Hawaii Revised Statutes Chapter 425R dictates you have to appoint a registered agent. Let's demystify this legal jargon right now. A registered agent is simply an individual who is at least 18 years old or an authorized business entity with a physical street address in Hawaii. Basically, their job is just to receive official legal and tax documents on behalf of your LLC.
And the state is very particular about the requirements for this role. First off, the agent has to have a physical street address. Absolutely 0 P.O. boxes are allowed. Why? Well, because a process server literally can't serve a lawsuit to a P.O. box. The agent has to be available at that address during normal business hours, 9 a.m. to 5 p.m. Listen, if your agent isn't there and you miss a legal notice, that can result in a default judgment against your business without you even knowing it. Also, it's worth noting that while you personally can serve as your own agent, the LLC itself cannot act as its own agent.
All right, Phase 3, Essential Documents and Filings, making it official.
This is the really exciting part. This is the actual paperwork phase where your business officially comes into legal existence in the eyes of the state. To make it official, under the seal of the state of Hawaii, you're going to submit a document called Form LLC-1. This is better known as the Articles of Organization, and you submit this directly to the Department of Commerce and Consumer Affairs. It's a remarkably simple document that just lists your business name, address, registered agent, and your management structure.
And here is that magic number again. The standard filing fee for the Articles of Organization is an incredibly affordable $50, plus a mandatory $1 state archive preservation fee. So for literally just $51, you legally create your entity. You can easily file this online through the Hawaii Business Express portal, which is going to give you the fastest processing times.
And this brilliantly illustrates a massive point of confusion for beginners, understanding the difference between your Articles of Organization and your operating agreement. Your Articles of Organization are filed publicly with the state to actually create the LLC. Your operating agreement, on the other hand, is a private internal document. Think of it as the core rulebook for how your company is run, how the profits are split, and what happens if an owner decides to leave. Now, while Hawaii doesn't legally require you to have an operating agreement, skipping it is a huge mistake. That's especially true for multi-member LLCs, because having it in writing prevents major disputes down the road.
Let's anchor these abstract legal concepts in reality for a second, using an actual document from our sources. Look at the timeline for an entity called 11th Street Partners, LLC. They filed their public articles of organization in October of 2015, which legally brought the company into existence. Then, a few months later in January 2016, the members officially signed their internal operating agreement to formally establish their private management rules. That right there is a perfect example of the correct 1-2 punch for forming your business.
Moving right into Phase 4, EIN, taxes, and compliance, staying in good standing.
Forming the LLC is just the beginning. Now we have to make sure you stay on the right side of Hawaii law and the IRS. Let's map out exactly how this builds a chronological sequence for your ongoing operations. First, you need to get an EIN, or Employer Identification Number, from the IRS. It is essentially a social security number for your business. And here's a tip. Even if you are a single-member LLC with 0 employees, you still need an EIN just to achieve Step 2, which is opening a dedicated business bank account. Once that's all set up, Step 3 is registering for your Hawaii state taxes.
Now, what's really interesting about this slide is this specific tax figure. While we mentioned earlier that Hawaii doesn't have a traditional sales tax, they do have what's called a General Excise Tax, or GET. This tax applies to nearly all business activities and gross receipts in the state. For most businesses, the state GET rate is 4%, though that can vary just slightly depending on your specific county and industry. To stay in good standing, you have to follow this ongoing compliance checklist. First, you must continuously maintain your registered agent. You have to pay those GET taxes we just talked about. You absolutely must file your annual report, which carries a super minor $15 fee. And I have to warn you here, missing that simple $15 report can actually lead to administrative dissolution by the state. That means you would instantly lose your liability protection. Finally, always keep your personal and business finances strictly separate so you can maintain that legal shield.
Now for Phase 5, licenses and trade names, building your brand.
This covers the final operational considerations for folks who want to operate under a different brand name or who need specific industry permits. If you've ever done business in other states, you've probably heard the term DBA, or doing business as. Well, we need to clarify the local terminology here. Hawaii officially uses the term trade name. So, for example, if your legal LLC name is Akana Enterprises LLC, but you want your storefront sign to just say Aloha Bookkeeping, you are operating under a trade name.
In Hawaii, trade name registration is technically voluntary, but honestly, it is highly recommended. By filing Form T-1 and paying a simple $50 fee, you formally register that trade name with the state. This helps protect your intellectual property, and it actually prevents other local businesses from legally registering your brand's public-facing name.
And that brings us to Phase 6, final review and disclaimer, wrapping up.
We've covered the immense advantages of Hawaii. The strict naming rules, the vital role of the registered agent, the $51 articles of organization, and all those crucial ongoing compliance steps. But before we sign off, just a quick piece of housekeeping. Please note that the information provided in this explainer is for educational purposes only and is not a substitute for professional, legal, or financial advice. Every single business situation is incredibly unique. We highly encourage you to consult a qualified attorney or accountant for personalized assistance with your specific entrepreneurial goals.
With the roadmap now clearly laid out in front of you, my final question is this. What unique business will you bring to the islands with your new Hawaii LLC? You've got the tools, you understand the surprisingly low $51 barrier to entry, and you know exactly how to protect your assets. The next step is entirely up to you. Thanks so much for joining me on this explainer, and best of luck building your business with the Aloha spirit.